Nigeria's Monetary Policy Committee is meeting for a two-day meeting today, and as macroeconomic indicators suggest improved stability, analysts at Sterling Asset Management and Trustees expect the committee to hold rates to preserve currency stability and support the potential appreciation of the Naira. Patrick Ejumedia, the head of research at Sterling Asset Management and Trustees, joins me now for a discussion on this and the wrap of the markets today. Thank you so much for your time today, Patrick. Before the show started, we're talking about your decision, your call, yeah, and
the outcome of the MPC.
yes. So let me get your take on what that is, and how you see the committee deciding in November.
So first, it's important that we have some form of perspective. Have a perspective, then we can then draw a conclusion from the perspective. Now, if you look at what happened in the US, last week, we saw them having their first rate cut since December. And what that actually did was to increase the interest rate differentials between the Nigerian interest rate and the US interest rate. And some reasons, even though we don't have sufficient data to back it up, some reasons why the exchange rates appreciated to us last week was because of that rate cut, because of the widening interest rate differentials that kind of led to some form of increased capital inflow to the country. So what are we saying? We are saying that, yes, the exchange rate is appreciating now, but we are still saying that if you check the last core data on inflation that was released, we saw that core inflation came up significantly. And one of the reasons why it is coming up, of course, is apart from energy price pass-through, FX pass-through, and the likes. So these factors, for us to completely bring that factor down, it's important that we hold exchange rate, we hold the rate at this moment so that we can have exchange rate to kind of stable or, if possible, appreciate. Because my concern is that if the rate is being held at this time, we'll see the exchange rate appreciating to as high as, let's say, 1.4 or 1.350, given that the rate is being held. And we'll see inflation now going down. We'll see the next numbers of inflation that's likely to come out. We'll see the inflation going down significantly because now we are in harvest period where food prices are coming down. We also expect core inflation to come down so that overall we'll now have significant drop in food prices. So again, that will help inflation to come down. That will help to stabilize the Naira. But people, a lot of other contrary view out there saying that, the market has been hostile. I guess the government have held the rate for too long time, and Nigeria is a subset of the global economy. And if the global economy is cutting, it's also time for us to.
I can imagine because manufacturers are dealing with quite a lot. But let's wait and see what the committee will decide tomorrow, and then let's get into other issues that I really want to get into here, which is the markets here.
Okay.
We're seeing quite a lot play out in the market. The third quarter, I was saying, about to, and just getting into the end of the third quarter, markets about to close currently at 37.8% roughly, year to date. Let me get your take on the performance of the market in Q3.
Yeah, of course. The markets, we saw the increase in the market that started sometime around July. So if you check what has happened in the market from July, we've been seeing that growth from about 16.57% that the markets closed around June. We saw a significant jump in July to about 32%. Year to date, as at July.
Yeah.
Then since that period, we've been seeing that upward growth. As we speak now, you said the market's around 37.8, And so before the end of Q3 now, which is next week, next week, we should be seeing the markets closing around that rate, maybe something very close to 40, depending again on what the reaction or the outcome of the MPC, Monetary Policy Committee, is going to be. If there's a further cut, if there's a cut in rate, what you will see is that significant amount of people will then begin to come into that space to play, and that can drive activities in the market, and that can push the market level up.
Yeah, because one sector that has actually been doing quite a lot, especially in the third quarter, has been the insurance sector. Definitely because of the news coming, around the reforms in that space.
The regulation
there. And then for sentiments today, we're seeing one player, Royal Exchange, and the acquisition that's playing out there. Let me get your take on the insurance space and what we can expect, especially on that acquisition, 21% acquisition from next month.
Yeah, so basically, again, what happened in the banking sector is likely to come into play here in the insurance space. We saw what happened initially when the banking sector was told to recapitalize. We first saw initial drop, and then when people started building confidence about what is happening in that space, they moved back into that sector. For the insurance sector, yes, the recapitalization process is going to bring some level of activity in that space because a lot of activities will be taking place. The recapitalization will bring about some form of merging or acquisition activities that will drive that space. I think that's what's likely to play out.
Yeah, but looking at the market last week, we saw some major earnings from the banks here, Zenith Bank, UBA coming as well.
Yeah.
Let me get your take on the banking sector, the results that are coming, and your expectations down the line.
Yeah, I think for the UBA and Zenith Bank that came out, yes, I think one of them did some level of profit. I think we saw Zenith Bank that had the net profit dropping by about 7%. We saw UBA, their profits increased by about 6%, and all that. But I think what is very important is what are investors expecting. Investors are expecting something way higher than the UBA that came out with 6% profit. And I think those are the things, part of why the market dropped. If you check what happened on Friday last week, you saw the market that has been going up from Monday to Thursday, now suddenly dropped on Friday.
Yep, but in terms of looking at the best performing stocks in the market right now, sector, rather.
Sector.
Yeah, I'm seeing the consumer goods up about over 90%, continue to be stronger. What's your take on that space and also the earnings down the line for the consumer goods?
Now, basically, yes, I don't think the consumer goods acting that is surprising. The reason is because of how we have started the year. We've said it that exchange rates is a major factor, is a major input in that space, and inflation too. So we've seen exchange rates, we've seen inflation numbers coming down. Yeah. And that's why that stability, that macroeconomic environment stability that we have seen is probably what is driving them. And that's why the outcome of the MPC at this point will play also a significant role in seeing whether that sector is going to go higher in terms of its performance or come down. But for me, I think either way, the sector will still do well.
Yeah, but when you look at then the decision tomorrow from the Monetary Policy Committee, in terms of current yields in the fixed income space, how do you interpret how things are going to play out going from tomorrow?
Yeah, so it depends on what comes out. So for instance, if they cut the rate, of course, what do you think will happen? Once they cut the rate, because of the positive relationship between almost all the rates, the major rates, which is the benchmark rate, goes down. You see other rates also coming down. And because of that, investors will be looking for where they will get highest return, and that will drive them to the equity space. But if they keep it hold, it doesn't mean, because if you check, even when the rate has been held constant since last time that we increased it has been held constant, it doesn't mean that they will not cut other rates. Because if you see what is happening to other rates, in terms of their stop rate, they've been coming down. Yields too have been coming down, except for OMO rates that has gone up. So it doesn't mean that what government will then begin to do is to check what is happening in terms of the exchange rate, to play around to what the stop rate will be, and that will again then drive yields in other markets.
Definitely interesting times in the market, but thank you so much for your time. I'm speaking with Patrick Ejumedia here, the head of research at Sterling Asset Management Limited.